Okay, welcome everybody to this evening's XAUUSD webinar. My name is Duncan Cooper. Tonight's webinar is Forex Trading Live Market Analysis. Now, just to give you a heads up through the week, tomorrow we're going through the webinar trade setups, limit order at a support and resistance zone. That will be at 7 p.m. Sydney time, and on Thursday more live analysis. If you want to join me for those webinars, just register at the webinar page. So if everybody can read through the disclaimer, if you're on our YouTube live stream, I cannot see the chat, but you're more than welcome to join us in the webinar. Just follow the link. For those in the webinar, you can talk to me using the webinar chat or the Q&A box. Got both open. So if everybody could just take time to read through the disclaimer before we move along. All right, we'll move along. Now, if you don't know me, my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at XAUUSD. And I am a full-time trader, so excuse me a moment. All right, I'm just adjusting my mic. Hopefully that sound is better. All right, so yes, my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at XAUUSD. And I'm full-time Forex trader. I've been trading now for more than 15 years, mentoring for more than 10. If you want to contact me, my email's there, duncan.cooper@acy.com. If you want to connect with us through the week, you can do that and get my PowerPoint to work properly. All right, a few technical issues tonight. All right, if you want to connect with us through the week, head over to the website, acy.com, go to the Market News tab. If you want to connect with us on YouTube, go to @ACYSQ Australia. And if you want to connect with me personally, head over to my Linktree page. You'll get my links there. If you want to get access to my chart layouts and templates for MT4, just contact Nathan Bray. His email's on the bottom there. I'll put it in the chat for you. He'll only be too happy to set you up. There we go. All right, so first up tonight, we'll get out and have a look at the news items for the week. All right. All right, so time shown on my time, Queensland time at forexfactory.com. Now, Tuesday tonight, 10:30 p.m. That's New South Wales, Queensland time. We have Canada's CPI data coming out, so that's the inflation data. Now, if those figures are lower than expected, that means the dollar Canadian will probably move up and vice versa. So it's going to be difficult trading a Canadian cross until that comes out today, so be very much aware of that. Then into Wednesday in the early morning, 3 o'clock in the morning for the pound, Bank of England Governor speaks. Tomorrow at midday, New Zealand has the official cash rates, policy statements and statements, press conference at 1 p.m. Not expecting any change there. We do as well tomorrow have the UK CPI year on year, expecting quite a movement down there, 2.1%. I'm sure the market's looking at this at the moment. The pound dollar is relatively nicely bid, but it could be overbid, could be at the top of its range at the moment. And if that comes in at a very low number, it's certainly going to signal that maybe the UK is getting ready to cut their interest rate. So that would potentially mean weakness to the pound dollar. So we'll have to look at that figure very closely tomorrow. Thursday, early morning, 4 in the morning with the FMC meeting minutes. Could be a bit volatile then, depending on what the minutes read. And then through Thursday, we have 5:15 p.m. the Eurozone French flash and manufacturing service data, 5:30 the German flash manufacturing and service PMI data, 6:30 the UK data, 10:30 p.m. US unemployment claims, and again the more manufacturing data for the US at 11:45. So last time we had all this data coming out last month, it was quite volatile for all the pairs, so maybe expect the same. Market will be looking at how this data is in relation to then, are we seeing growth or contraction? How is that going to affect interest rate decision making in these countries, especially on the US data they release? So could be highly volatile, in that period as those data releases get released on Thursday. So be very much aware of that. And then on to Friday in the afternoon, 4 p.m. for the UK pound, we have retail sales. And into midnight on Saturday, we have the US revised UM consumer sentiment. So there's data coming out. Be very much aware of when it's coming out and what could affect your positions. Notably, the pound CPI data this week, that's definitely going to affect the pound for sure. It is quite high at the moment, so we may see a reaction down if that comes out on a very lower number. Okay, let's get into the charts now. Dollar index had been losing ground last week. This is the daily chart. This range from low to high is actually the weekly swing range. We're still in an uptrend here on the weekly. We're just pulling back from this move up. And this range, if I go to the daily chart, it's the range of last month. So putting that into perspective, that is the candle for last month. So we're trading back inside the range of the candle. We're starting to maybe want to hold above the 79% level of that. Really, we've come down and filled the imbalance that was here. See where it got support, just below the balance. And we are starting to want to close above the 79% level. So if we continue to hold at the 79% level, I would anticipate that maybe we're putting in some kind of bottom here to come back up. So I would, be monitoring the structure of that to see if we start to form a base here to move higher. And if that's the case, then we will, of course, see pairs to the US dollar moving down, like the euro dollar, which we'll get into shortly. Maybe putting in a bit of a lower top now on the day chart, which would emphasize that this could now move up. Now, the S&P 500, it's pretty much at its all-time high. How high can it go? I mean, it's had a correction down here and then it's moved back into its bull market. Of these major swings, we have a much more major bottom in here on the daily to this minor one here. I would be monitoring. If you want to get long, look for a pullback. So use that bottom, drag your fib up and look for a 62.79% retracement for support before the next move up. Do you really want to be buying at the high of the overall move? Probably not. Buy dips in an uptrend, so monitor for a dip. Okay. All right, now the euro dollar, which is seeing some intraday move up at the moment, but let's go to the day chart. And we're going to go to the weekly chart. This is a significant high here to a low. And we've actually moved above or traded above a weekly top here, but I'm using this range because we have quite equal ranges from that move down, rally to that move down. So I'm looking to see where this could maybe top out at, putting in maybe an equal leg back up to go like so. So at the moment, it's traded above that weekly high there is last month's high point. And it's traded above there, but it's holding at that level. So is it holding there? Is it going to form some kind of weekly chart double top to see a reversal? Now, what we have seen, if you've got a keen eye here, is we've put in a rejection candle at the high. Yes, traded above, fell down, came up yesterday, tagged the area and rejected, and we have had a day down. So it is maybe starting to put in a lower top there. And you can wait for some more information to see if we do start to head down. But if we are forming a double top here, you want to be getting in by the 79% level. That's at 108.23. For the idea that if it is a double top, we could see the height of the pattern projected below, and that would take us down to 103.16. So the question is, are we seeing a double top here? That if we break this midpoint, we could move down to here. So if we start to see a sell-off here, we did, reject yesterday. Want to be in by the 79% level, getting a position going, because that would give you very good risk to reward if we came down to this level here. So you want to be getting in within the early phase of that large double top to maximize the risk reward. Now, of course, if we blow above this area, then it's not a double top, but at the moment we're not doing that. So I'm just discussing what I'm seeing. For our chart, we came back up yesterday, 108.84, tagged that monthly high, failed, and there was a 79% level up there. There it is. So a good opportunity to sell up here, stop above the high. We may well come back into this area, depending what today brings. So again, you may get another opportunity to sell up there, and you could just be selling, selling in this area, stop going above here somewhere. If you don't know if that's quite the final high, you could, be selling it here with a 100 pip stop, getting your stop well above this high, positioning yourself for the potential of a large move down from that double top. Now, there's another range that could be forming here at the moment. We may come up to that 79% level once more, but there's also a little smaller range that's formed here on the sell-off down from yesterday. So to the 15-minute chart. So, up here would be a good area to watch today. 108.76 to 79% level there. All right, this is a fraction of an imbalance in this area here that didn't get filled yesterday. So maybe the market just wants to come up here to fill that little area there. So intraday today, it is showing some uptrend. Yesterday, quite clearly, it traded down all day, and we have had a day down. So it might just be now coming up. Intraday, watch the fib levels. So we moved down yesterday. There's a 62 level here. There's a 79% level here. Either one of those two levels could start to see the market want to hold and turn around. So what do you need to see happen to get yourself trading back down the chart if we start to turn over? All right. I would, of course, if you followed me on my analysis, I'm generally looking at the 79% area because it offers me the better risk reward. Just want to see where the other 79% level is. Back to 15. All right, the lower one is at 108.76. The higher one's at 108.81. So we're going to come up for another failure today. We'll have to wait and see if we can get up there. Euro yen is at a very long term. Let me just get rid of that fib. Go to the monthly charts. We're coming up just very short of 169.95, which squash it in. This monthly high that we false broke, so a major selling level that we false broke a couple of weeks ago. We've been a few pips just short. So it's not an area where I'm going to buy because it's definitely a sell area. Are we actually seeing a signal to sell yet? Probably not quite. But I think that's what you should be looking for. We're going to see a further failure up here. All right, so on the day chart here, this is where we had this big rejection, move down, then we'd be coming all the way back up. So we're kind of sitting at the 79% area overlaps with that major monthly high point. And that's at 169.95, and today we've been up to 93. All right, so 93.5. So 1.5 pips short. Now, structure on the 4 hours still up. If we break this low area, it's going to turn it down. So I'm just waiting to see Well, you could already be short. If I just drop to the 15-minute chart, you could have already been short. You could have already traded a trend line break. All right, we might be coming back up right now for a 79% failure here. So this area here, this is the area to watch for further test and failure at this major resistance area. Okay. Just trying to get rid of that box. On the 4-hour chart, if you want to wait for a bit more information, because the 4-hour structure is still up here, you could just be waiting for the 4-hour structure to break. So we're going to break this low, first of all. All right, and then see if this can come up for its lower top to form at a 79% rally point to see if it can start to come back down. So is this a major failing area up here? All right, 4-hour trend is still theoretically up at the moment, but it's difficult to get long up here at such a high level where intervention came in last time, and we're at the major monthly, major monthly top, historical top. This is potentially where if people are long, they're taking profits at this area. Okay, that's my thoughts there. Potentially, you may be able to get a very tight entry in here on the 15. Selling at 79% here, getting your stop above the area above, just in case price comes up to spike up. So you probably want to get your stop above 1070, so 170, something like 1720, or if you want to use my 100 stop method, you could be getting short at 169.84, stops at 170.84. So you've got plenty of room then for price action to come into this area and spike around a bit. If it wants to, it doesn't stop you out. And you're really trading the 169.95 level failure point. Asking the market, are we going to break above this level and continue up, or are we going to see a significant failure? Because potentially we could form a double top on the major scale at that monthly high point and see a long-term decline from this. And this, if you can get short here, you could be holding it for months if we start to, turn to the downside. All right, euro pound. Today chart. Back down to 79% area here. This is on our weekly low over here, which is offering support. And if you drag a fib up from here, we're in the 79% area here. Price action is not that great on the euro pound, but at the moment it's in the support zone. So, 4-hour chart here is just giving you an outside reversal candle to the upside. That's, you had a bullish reversal candle here, an outside candle to the upside here. So it's kind of showing support down here at last week's low. I would anticipate it's going to move back up from here at the moment. But price action overall in the euro pound has not been great. It's going to be widely affected, I'm sure, by the pound CPI data on, when did I say that was coming out? Tomorrow, I believe. There we go, 4 p.m. tomorrow. So be aware of what can affect the pair. That can most definitely affect the euro pound tomorrow. Okay, so it's under support area at the moment. Pound dollar. It's really struggling at this 62% level. This 62% level it's not this range. It's the bigger range to the left-hand side. It's this range here. All right, and it's very similar to what I was discussing on the euro dollar. It's trying to trade above last month's high, which was a weekly high, and it's struggling there at the moment. Struggling at the 62% level. It isn't managing to hold above 127 at the moment, but tomorrow's CPI data, if that comes out a much lower number, we'll most definitely see a failure here. So there's the potential. We need some more information at the moment. Is it going to break above this high, come up to test these high points, or are we forming some form of longer term double top area here, maybe to come to here. The UK, if data comes out to most definitely reflect the idea that maybe the UK can cut interest rates ahead of the US, it does open up the idea that we could move down to this area at 120.36 long term, depending on what happens here. All right, so day chart. Look at the last three candles. We've got wicks here, not able to close above this high. You know, at the moment, we're still able to hold a gain at the moment for the day. But what will be the result by the end of the day? Are we going to see, can we hold above 127.09? That's that monthly high from last month. Depending on the CPI data, we could come up tomorrow to test over here about the 128.30-ish level. All right, could come up to this 79% level of this range. But you know, if we start to see more rejection in this area, we may not get up as high, but it's worth watching those levels tomorrow if the CPI data drives it up there. Today, dropping down the timeframes, 4-hour trend is holding here at the moment. The last candle there to the left was quite a negative 4-hour candle. And I'm sure if I break this down to a lower time frame, there'll be a 79% level up here where that candle held. So we could be actually topping out intraday here today. See, we moved up, sold off. So let's just go through the ranges here. The lowest points there of that move down. We've seen the 79% level come up, come down. Is this forming a little lower top here to come down? All right, it's struggling. That 79% level of that right minor range is overlapping with that 62% level. So the market's definitely struggling up there. So if you're wanting to get short, that's the area to watch today. Can you get short at 127.18? In terms of support, as we've been heading into the London session, central pivot point. Get the number, central pivot points at 127.07, 127.09, last month's higher area is offering support in today. So at the moment through London, it's getting support in about a 20 pip range here, support and resistance in 20 pip range. So you don't have to risk much up here to get short. And if you're more to the upside, you don't have to risk much, add support to try and get long. It's rather tight in here at the moment and, you know, could break either way today. So, you know, what's your philosophy for the pound dollar? Are you bullish or you're bearish? Might keep it a slight bid ahead of the CPI data tomorrow. It doesn't seemingly want to spend too much time today above last month's high, this line across here, which is 127.09. But we are very high up. It's waiting for some data to, you know, determine is it going to break north or south. So a bit difficult at the moment, pound dollar, but those, you know, it's in about a 20 pip range at the moment. Pick the side of that range that you want to trade on. Pound yen, it's at the 79% level. This is my 4-hour chart of the big decline that we had a couple of weeks ago, 2 or 3 weeks ago. Now, it is above, if we go to the monthly chart, this high over here. So it is, unlike the Euro yen, which is its major monthly high, it's below. Just got close to testing it, retesting it today. The pound yen is above its major monthly high over here. So it is a lot more bullish. Weekly trend is up. Just the question is, this decline that we had down here, is this a rally failure to come down, back down? It's, you know, there's a 79% level of that drop. You can see today's candle. Of course, today's candle hasn't finished yet, so we don't know whether it's going to finish with a wick at the top and a rejection. So I'd just be waiting to see what today's candle does. Do we get some kind of signal there today that it's rejecting? And does it close below 198.55? Is it showing you a reversal up there? It's difficult to be a buyer up here. It's so high. But if it does show a very nice rejection, then you could start to look for your setup to sell. Now, if you're more bullish, the 4-hour trend here is still up, but you want to look for a pullback. So I would go from this 4-hour low, drag my fib up like so, and look for a pullback within that range to the 62.79%. 79% is at 197.70. I put a line across. Could get a little bit lower into this high over here, which almost gets into this low here. But if you're much more bullish, you still want to look to trade a pullback. Look to that 62.79% area. You've also got last week's high in that area too. So that was the high of Friday's move. This has been price action for this week currently. So 197.96 down to 197.70 is the area to watch for support with the fib tool. If you're on the buy side, if you're on the sell side, you're looking for some kind of change in trend on the 4-hour chart down from this 79% level. You start to see a shift in trend. All right, Aussie yen. It's above its 79% level of that big sell-off at the moment. It is getting wicky up there. I just want to get rid of that fib at the moment. It's getting wicky up there. If we go to the monthly chart, what has been happening is we false broke this monthly high to sell off, and we couldn't get up to this high here at 105.42. Now, historically, like a lot of these yen pairs at the moment, we're in the sell areas of history. Historical sell zones where when we've been back to these areas before, we've held, we've turned around. So all I can say is, from my experience trading, more than 15 years, I just know that when we get into these zones, the probability is we're going to turn around. Now, we can move up and through and higher, but you can see, even though we moved above this high level, we came back down to the historical. This is the historical low area. What happens in that area? We move back up. When we're in this historical high area, we move back down. So I would anticipate that we will probably move back down. So with that anticipation, looking for a signal to get short, not a signal to get long. So at the moment, though, all trends, the weekly trend is up. The question is, are we going to go above this high at 104.93? Are we going to retest 104.93 and fail? Or are we going to fail ahead of it? Bit of a wick yesterday, bit of a rejection up here. All right, yesterday we did close above 104 just, but we were struggling for a good half of the day to hold above 104. So again, today, are we going to be able to hold above 104 or are we seeing a reversal? I would certainly watch up here. It's worth having just put the fib on to get that high. It's worth watching that high this week for a test. We see a fail up here. That would be a great area to look for a very tight short at 104.93. So 104.93 up to 10500. At the moment, the 4-hour chart is getting a little bit sideways. It's not quite able to break down, but it's already put in the lower top. And let's just have a look at where it failed. 79% rally. So to the 15-minute chart, there's a 79% failure earlier in the day. Excuse me one moment. right, sorry about that. I had to blow my nose now. We failed at the 79% level up there. There was a bit of an imbalance formed here. So what we might see, we could revisit that 79% level. What we might see later in the day, depending on what price wants to do, if this is a high that's not going to be taken out, we may well now see a rally back up within this range. 79, that's a 104.31. We've also got last week's high here. So price isn't, that's last week's high here. Price isn't really able to hold above last week's high. Once it gets above, it wants to come back below. So that's a nice little area to watch. 104.31. 104.29 up to 104.31 there. Last week's high up to 79% fib there. Assuming it can get up there, may not want to get there, but you can watch that area. Aussie. I discussed this range last week because there's a 62% area here of the late high put in late December down to this year's current low. There's a 62% area here, which you can see is kind of holding the market. At the moment on pullbacks, this 66.48 level is where the buyers are defending at the moment. We have put in a little bit of a minor, little lower top here. So is it going to start to come down and change its trend to the downside? All right, it's definitely struggling. Putting in a little bit of a lower top yesterday. If we break it down to a lower chart, for our chart, we've seen like a 79% move. Failed up here at 79% level. It's just broken that low point. It's getting support from last month's high, 64.48 down to last month's high at 64.43. May well come back up within this range now. Is it going to put in another lower top? So we're really starting to see a little bit. It's just holding to the downside at the moment in terms of lower top, lower bottom. It's going to come up again. And we're going to see a break. We need to see a clear break below 66.48 at the moment for this downtrend to continue its force. Now, if you're more on the uptrend, even though at the moment that mapping out is just starting to show it from an intraday chart perspective, a downtrend. If you're more to the upside and you think, well, this downtrend I'm seeing on the 4-hour chart is going to revert back to up, the major level to try and get a buy-in at or around is down here at 66.48 from this day chart top here, because that's where the market's getting held through here. All right, so that's where, if you're more bullish, this is where you want to be watching. If you're more bearish, you want to be looking up here at the 66.95 area up to last week's high for an opportunity to sell. So there's two sides of that market at the moment. It's rather range bound there, but slightly down. Which side of the market is going to win out? All right. Now we have the interest rate decision for the New Zealand crosses tomorrow. New Zealand yen is really struggling up at this area here. I just want to show you where we're at. We're above this monthly top. We've got another one to the left. So we're at the sell. Now if I really squash this in, we're at the historical sell area of the pair. Very high priced. This is for the New Zealand yen. Weekly trend is up, monthly trend is up. As I say, very high priced, and we've come all the way back up to test this sell-off high candle. You can see yesterday we pretty much closed at the high. We closed above the day before, and you closed at the high yesterday. You can see today we're not holding the high. So are we failing there? Interest rate decision Maybe want to wait till past the interest rate decision tomorrow, but then I just want to double check it is tomorrow and not Thursday. I always have to refresh my memory. Wednesday, yep, tomorrow noon is, depending on what gets said in the commentary, we could well hold here and come all the way back down the range. You can see here at the moment, the market does not want to commit above 95.37. 4-hour chart has seen a 79% retracement up here. So it's not wanting to commit above there with tomorrow's news. This once more could get retested though this week, especially after the news tomorrow. That would be the area that I would watch at the top there. What's going to happen up there at the top? All right. Difficult to take a position today when we've got the data coming out tomorrow, but most definitely 95.37 up to the highest point of these three candles at the moment is the area to watch tomorrow. If we're down by the close of today and then we spike up there tomorrow, if we start to see dealing back below 95.37 on any rally tomorrow, that's the time to think about, okay, do I want to short that? All right, New Zealand dollar to the weekly chart. It's come up to 79% level of this range. This little box is where I said it might come up to last week and fill an imbalance. This imbalance in here, which is done. Now we could well further see a retest of the 79% level tomorrow after the interest rate decision. That's what I will be watching for. If we come up, do we once more want to hold at 61.39? All right, still an uptrend on the day chart here through this period, but it's holding at a notable 79% level after filling this imbalance in here. Okay, so that's most definitely the line in the sand at the moment. And if you look at price action to the left, it was very choppy in through here. But if I just average these highs out, so if I just average it out, around about through there, we had an area of consolidation. We tried to break above and we couldn't. Came down, formed a double top, and then down we came. All right, so this is where the market fought to break south. So is the market still defending that area to move back down? All right, so 7% levels at 61.39. Now more on the buy side. If you're more on the buy side and you think we're going to take out these highs and come up to this high long term, you think the fundamental focus is to the upside rather than downside. Support at the moment is this high here at 60.82. So that would be the reference point for the buyers if you're on the buy side. And that's your reference point if you're on the sell side at 61.39. Dollar CAD, this is the area that I was discussing last week for support. And it's kind of proving the point at the moment that this old area here, there's a low here, and the highest point of this area here, 36.14 down to 36.08 approximate area. Even though the market's been below there, it's where the buyers are coming in. All right. I'm suspecting that we've got the CPI data tonight, so it's difficult to get in ahead because we don't know what it's going to do, but this area holds. I'm expecting we're going to maybe see some form of price action that way. If inflation picks up, then probably not. But if we go and have a look at what we're expecting on the data front, expecting the figures to tick down ever so slightly, the year on year to move to 2.7 rather than 2.8. Of course, if these print higher, the dollar Canadian is going to go down, and vice versa. Structurally, it's been more bullish than bearish over the last few months. Let's come back to this area of supports. So, if we go through the higher time frames, just to prove the point, we actually have a higher top here on the monthly to a higher bottom, this inverted head and shoulders. And whilst we're pulling back within the range of last month, that's in an uptrend when we talk about higher tops and higher bottoms. Weekly, higher bottom, higher top. This has been corrective over the last few weeks, correcting the move up. To the 4 hour, we put a fib across last month's range. Okay, we're at or around the 62% area of last month's range. So it's just wanting to hold below this area of day chart broken support at the moment. So if the CPI data comes out stronger, this area would potentially hold to move down. So that's why I say until we get the data out, we're not going to know which way it's going to move. Higher time frame trends are up, and we've been getting some support in the support area. So I suspect the larger part of the market has been buying in this area, getting ready for a relatively good or a weaker number to favor the idea that inflation is coming down, and this would potentially move up. Right, dollar franc. This is the area I had highlighted last week. This is a day chart. Came in like last week, held at support, coming back up. It's very slow going on this pair. As you can see, it's in tight ranges through here, trying to move higher, then fell back down to support down here, and then it was in a tight range in here. So it's not the best pair in the world. If it came back up to 91.47, this could be a good area to sell because that's where it's been holding. And if it came back down to pretty much the 90 level, that's 90.06, that low here. That's where the buyers are. So it's quite range bound. So you have to trade, where's the outside parameters of support, resistance. Okay. I don't like when I can see where the boundaries are. I don't like trading in the middle. I like to be, trader at support or trader at resistance. So buying at support, selling at resistance. Okay, dollar yen, which is not easy at the moment. After we had this decline, this hasn't rallied as much as the other pairs to the yen because the likes of pound dollar, euro dollar, Aussie dollar have been moving up quite strongly. That's had the same kind of cause and effect on the pairs to the yen for Aussie yen, euro yen, pound yen, whereas the dollar yen hasn't been able to get to the 62% level where most of the yen pairs are up at the 79% levels. So what we have is a lower top, we have a lower bottom on the day chart, lower top, higher bottom. So that gives us a very definite mix. And there's the 50% point. So of the, the big sell-off, we're pretty much right smack bang in the middle. So who's in control at the moment? It's a bit of a stalemate, isn't it? So if we finish today with quite a negative candle and then we have a down day tomorrow, that is going to put in a lower top. So that would be a little more suggestive that we're starting to maybe want to eat to the downside, although, things are mixed because at the moment we have lower top, higher bottom. If we have another lower top, at least we've got two lower tops here to one higher bottom. So that would be slightly negative. But right now it's just in the middle of this major move. So I need some more information to see really where that's going this week. So if I'm unsure, I'm just going to wait and see. Okay. All right, just finish on gold, which has been moving up to test the all-time high once more. So with the S&P 500 moving up, gold moving up, Clearly, the market's anticipating that the US is going to cut interest rates for sure. It's just a question of when. But at the moment, it's not in the area of gold there where you want to be a buyer. You at least want to see a dip, because you can see these two highs to the left, it's struggling here. And day chart, there's a bit of a low in here. That was the last time we had a day down. So we'll use that range, and you want to allow price to pull back to an anticipated area of support. So I would be looking at, this is a nice area here at the 62% level. So this zone here, once you move above it, putting two high bottoms in here, that will be a good area to watch if we can dip down to that area. Don't know whether we can or we can't, but that would be a good area to watch. At the moment, in closer price action, it's getting a little bit range bound in here. You could be looking at this area. At the moment, it's getting support at about 2407 down to 2406. So once more, if it was coming back into that area once more on hold, it could be forming a base here to break above 2431 as well. So depending on if you want to wait for a healthy pullback, or at least to where intraday support's forming, not trying to be buying any, at the resistance point or area to the left here. All right. Not easy, that gold at the moment. It's at, when it's testing the all-time high, not a great area to be a buyer. It's where obviously people are taking their profits, concerned that price won't move higher. So you always want to then look, if you think it's going to move above that area longer term, you want to be looking for a dip to try and position yourself into. All right. So at the moment, so I'm going to go back to the news page. Pound's very much in focus this week with its CPI data coming out tomorrow. New Zealand pairs, predominantly New Zealand dollar, New Zealand yen, tomorrow noon with the interest rate decision. Not expecting any rise. We haven't risen for a long time now. I think it's going to be a question of when do they give any indication that they're getting close to wanting to maybe cut. Azu, you're asking me on the euro dollar, my buying area. Get my other charts up. It would need to pull back more than where it's at the moment. On the day chart, if the day chart trend here is going to remain bullish, this is where we broke above last week. Just want to go to my 4-hour chart and see where the low last week was. That's the range of last week. 62% level overlaps with the day chart high over here at 108.12, and irrespective of the fib tool, that was the high point I was just discussing from the day chart. 108.12, I would say down to about 10800 would be support on the euro dollar at the moment if the buyers are in control and want to keep it moving higher. At the moment, though, on the day charts, it is maybe failing though at this high here to the left, because as I was discussing before, this is put in a little bit of a lower top here. All right, so it may actually be coming up to retest resistance today to maybe trade down. And from a short perspective today, from your question, what I was looking at before was this range here. 79% levels up here at 108.76. Because we traded down all yesterday. We might be just coming back up within the range of yesterday, and we've had a day down already. We might just be coming back up within the range of yesterday. to fill in it, there's a very small imbalance in here that hasn't been quite filled. So we might just be coming back into that area first of all today, and then trading down again. So those are the areas that we'll be looking at. High up for a sell, or lower down at the 108. What did I say? 108, 108.12 down to 10800 area could be support. All right. Thanks, Azu. All right, just to give you a heads up, tomorrow I'll be doing a webinar on the trade setup limit order and the support or resistance zone. That's being able to identify support and resistance zones, and then trading using limit orders to enter as price gets to those levels. So that's the topic of tomorrow's webinar, and then on Thursday, more analysis. So if you want to join me, just head over to the webinar page, register your interest, and I look forward to seeing you then. So just be very much aware of the news announcements coming out for the week. There's quite a few there that could catch you on the wrong foot. Other than that, have a great trading week, and I look forward to seeing you next time. Thanks, everybody.